Welcome back to the Crypto Father channel. Today is the 15th of July and it's a relatively decent Tuesday morning, despite the fact that the market slowed down a little bit. But I've got a bunch of news today for you, some announcements from the crypto week in regards to banks and custody of crypto assets. Jerome Powell's on the table, the Trump feud, Federal Reserve, and also some news on what whales are accumulating and Bitcoin price predictions. All of that coming up. But before we go into that, quick look at market caps. Pump.fund just launched a token a couple of days ago, I think at the beginning of the week or so. They made a whack of cash within 12 minutes, like $500 million within 12 minutes. And if I'm not mistaken, this is the Pump Fund token, which is presently dumping, launched July 15th. Presently, it's the 15th. So that's not looking very good for the token. So presently, the token is dumping. The crypto market, however, continues to pump. We are sitting nicely, comfortably at $3.8 trillion. So this is a $100 billion uptick from yesterday. And despite the fact that things are looking a little bit reddish, or they were a minute ago, is everything pumped once again? Holy macaruno. It would appear that everything's gone up. Like since this morning, since I was sitting on a can, things were looking a little bit red, and now they're back on track to being green monsters again. $227 billion in trading volume. Bitcoin at 120. Although CoinGecko does not. Oh, I don't know. There's a discrepancy between CoinGecko price displays and CoinMarketCap. CoinPaprika displays Bitcoin at 119,000. CoinGecko at 120. Ethereum seems to be about the same price. CoinPaprika, here we've got fear and greed is beginning to move into the greed dimension. 74 in greed. So we've got Ethereum at $3,000, Solana 162, Cardano at 73 cents, Sui 382, Chainlink 1579. Bitcoin Cash, is it moving? Not really. Bitcoin Cash went through a massive hype in 2020, and after that it kind of died down, and now it's just, I don't know, it's a bit of a dormant coin. Toncoin at $3, Litecoin at $95. Polkadot went up above $4 and then back down below $4. Pycon in place 40. Meowcoin has recovered somehow. I've looked at it this morning. Meowcoin has recovered 15%, so went from a massive dump to a bit of a pump. Market cap still remains at 300,000, 396, almost at 400,000, but it's definitely a pump and dump scheme for this token, for this coin. There's a bit of manipulation going on in this. Exit liquidity, man, people buying in, and then they tend to be exit liquidity. The total market cap for altcoins is still at $1.3 trillion. The $6 trillion that somebody talked about recently, man, that's a long way away. I'm not going to be holding my breath for that to take place anytime soon. Bitcoin chart looking juicy. We've got Bitcoin here, needs to break above this resistance at 121. Once this resistance is broken, this is on the weekly, let's go look at daily. Once this resistance is broken, actually, 121, if that gets broken, right now Bitcoin has been rejected on this trend line, but obviously we're moving upwards. The MAs are moving upwards as well. So once that's broken, I think we should have a bit of a clear sky. It did breach the line right here, but it didn't sustain itself, unfortunately. No sustenance. Volume coming in. There is a bit of volume right here on this buy candle, so that's good to see. BlackRock's Bitcoin ETF just became its most profitable in under 2 years. Now, doesn't that just grind you the wrong way? It bothers me so much because, I mean, this is BlackRock's iShares Bitcoin Trust has officially become the firm's most profitable exchange-traded fund less than 2 years after its debut. So this is on the back of Larry Fink stating officially on, news outlets that his customers had no interest in cryptocurrencies. Like, those were his exact words. Our customers have presently no interest in cryptocurrencies. And just 2 years after these statements, the iShares Bitcoin Trust ETF is the most profitable asset for these bastards. It grinds me the wrong way, because realize it or not, Bitcoin and cryptocurrencies are getting stolen from underneath the people's feet. That the coins, the crypto that was the thing that was supposed to be for the people is now becoming completely institutionalized. And it's nice to see the prices go up. But US crypto regulations this week. Banks given green light to custody crypto ahead of key legislation voting. So the voting hasn't even started yet, and the banks have already been given a green light to start accumulating Bitcoin, start letting people keep their crypto in the banks, which hopefully means that there'll be a lot more options to on and off ramp customers from fiat to cryptocurrencies and be able to use crypto exchanges. The US banks have been given legal permission to custody customers' crypto assets but comply with existing laws. The Genius Act will face House voting this week, including other legislation. The clear crypto legislations have helped onboard more institutional investors in the United States. Banks can now custody customers' crypto assets. On Monday, the Federal Bank Regulatory Agency, the Federal Deposit Insurance Corporation, the Federal Reserve Board, and the Office of the Comptroller of the Currency issued a joint statement on crypto assets safekeeping by banking organizations. According to the joint statement, banks can now offer custody services to their customers for crypto assets such as Bitcoin. The agencies highlighted that banks must comply with existing banking regulations while dealing with customers' crypto assets. The only reason why this is being done is because they realize that there is millions and millions of dollars made in transactions. And how are banks going to custody crypto assets when they're not really equipped to do so? They're going to have to scramble and start developing systems that will allow them to do that, to custody assets. And the only fastest way that they can do that is by partnering up with cryptocurrency exchanges like Coinbase. So maybe that's what they're gunning for, unless they've got teams of developers in the back door somewhere hanging around waiting for them to start implementing these services and providing them to their customers. Banking organizations may provide safekeeping for crypto assets in a fiduciary or a non-fiduciary capacity. Banking organizations that provide crypto asset safekeeping in a fiduciary capacity must comply with 12 CFR 9 or 150 as applicable, state laws and regulations, and any other applicable legal provisions such as the instrument that created the fiduciary relationship. So banks are essentially expected to be trustworthy. Trust the banks. So that's huge. In any case, that's huge, because you know that people will be rushing to banks. Banks have been, as much as many people hate banks, banks are an inevitable evil of our system. They've been around for so long, they're not going anywhere, and tons of people find comfort in them, and they're supposed to be the good guys. Obviously, they're not. We know they're not. But again, we're just population as a whole, we're just letting things happen to us when they get shoved down our throats. We continue to use them, despite the fact that there is no need for banks. Like, we don't need banks. That's already been said. Banks have been sidestepped for years now. While institutions were trying to figure out what to do with crypto, people have been using crypto. We've been trading crypto without banks, and did okay. Crypto funds, so second largest record inflow, all about Bitcoin, ETH, XRP. Crypto funds saw 3.7 billion in weekly inflows, the second largest inflows as Bitcoin price continues to hit new all-time highs. This indicates a massive bullish sentiment among investors. Obviously, massive amounts of cash flowing in. Bullish sentiment among investors continues as Bitcoin and Ethereum dominate with one of the largest inflows as per a report. The 13th consecutive week inflows reported by CoinShares was on July 14th, which was just yesterday. This caused the total assets under management to reach a new high of $211 billion. The amount of money that is flowing into ETFs and into the hands of these institutions is staggering. They're reaching highs unprecedented. I mean, all of this is beating the stock exchanges by long shots, and massive companies like Microsoft, Nvidia, and Apple combined. It's the market cap for cryptocurrencies and Bitcoin in particular is completely eating up all the other market caps. So it's just a matter of time before I think gold gets swallowed up, and it's just bizarre. It's so bizarre. Like nobody in the institutions cared about Bitcoin and cryptocurrencies up until last year, and now all of a sudden it's a gold rush. And once the ball started rolling, there's just no stopping it. One after the other, the blocks fall, and companies are like, it's like the stuff you see on Black Friday when Walmart opens its doors and people rush in and just grab everything and stumble over one another in order to get to that discounted TV. This is what's happening with these institutions, rushing to get as much of Bitcoin, as much crypto as they possibly can, and they will dump anything and everything in order to raise more money, like Strategy is doing right now, in order to secure more Bitcoin. Trump firing Fed Chair Powell could trigger Nixon shock, warns analysts. According to Sarah Velos, if Jerome Powell is fired, the market could be disrupted within 24 hours. As per WSJ, Sarah Velos told clients in a note that dismissing Powell could lead to a 3 to 4% fall in the dollar and push U.S. Treasury yields up 30 to 40 base points in a matter of hours. He doesn't really specify the reasons for why that would take place. President Richard Nixon's 1971 decision to devalue the dollar and unpeg it from gold caused global financial turmoil and a gold price boom commonly known as the Nixon shock. I'm not sure that this would have the same effect, because while Nixon separated a currency from an underlying asset that basically created value, Powell is just a dude working in a company. Not sure that has anything to do with it, but let this guy have his 5 minutes of fame. Weighing Grayscale exposure after firm signals possible IPO path. So Grayscale may be looking at launching an IPO, so there could be another IPO coming your way. Bitcoin gearing up for a big move after reaching true price discovery phase. ProCap's Anthony Pompliano says that we're going to see a massive move. But I mean, all of these guys are selling that. I guess they're selling the pump. I love this, man. Pump is desperate for acknowledgement. Professional capital management founder. Do you think he pays for these advertisements, for these headlines? Professional capital management founder, because he was just a crypto bro, and now all of a sudden he's trying to turn into a professional looking dude, and I don't know, I don't see him as such. So it's just funny. In a new interview with CNBC's Squawk Box, Pompliano gives 3 reasons why Bitcoin is leading the crypto markets to new all-time highs. The first thing is that there have been record inflows into the ETFs. Last Thursday alone saw 1.2 billion, the second highest day ever. The second thing is that the options expired at the end of Q2, so all that downward pressure on Bitcoin went away. That helps kind of like a beach ball being pushed underwater. And then the third thing is that there were a lot of short sellers. You started to see that build up, and as they got blown out as Bitcoin ran, you entered this price discovery phase. So those are the 3 reasons Pompliano thinks Bitcoin is going to pump. Bitcoin charts market cycle history hint at 15% short-term push to $138,000. A key metric highlighting market sentiment among short-term holders is the NAV, net asset value premium, which compares the market valuation to short-term holders holdings to their average cost basis. Currently, the NAV premium sits at 16%, comfortably within the moderate interest zone marked by green on the chart. This range, 0 to 25, reflects a cautious optimism among short-term investors, but remains far below the historically overheated 30 to 35 range, where FOMO-driven purchases have typically marked local tops. So we're still well below that FOMO-driven frenzy, which usually massive FOMO starts kicking in from retail. That's when you start seeing them becoming the exit liquidity. Adding to the bullish case, Glassnode underlined that Bitcoin spot volumes have jumped 50% over the past week, signaling growth participation in the rally. However, volumes still sit 23% below the year-to-date average, indicating broader market is not yet in full swing. Participation is rising but hasn't hit a euphoric peak, reinforcing that this rally may still have fuel. It looks like Bitcoin still has some legs, and therefore we're looking at the $135,000, maybe more than that, maybe less than that, but whatever we've got it right now. What is Bitcoin at right now? Let's have a quick look. CoinGecko 120. Let's look at the charts on TradingView. By the way, I think I do have a TradingView link below the video, so if you don't have TradingView, you can download it and start using it, because it's a nifty little tool. You can look at all the prices, relevant prices, so get it for free and start using it, which is what I'm doing as well. What crypto whales are buying ahead of the CPI reveal? Whales are stacking 1inch, Chainlink, and Curve as the July CPI release nears. Accumulation has been happening between the 24-hour and 70-day bands. SPX 6900 also sees minor inflows, adding weight to the meme coin supercycle narrative. In the last 24 hours, whale holdings for 1inch rose by 5.6%, pushing the total balance held by these wallets to 9.56 million tokens, which is at the same time the top 100 addresses still hold about 1.2 billion in 1inch. Chainlink, from July 10th onward, Link saw a 6.19% increase in whale holdings, now sitting at 2.84 million tokens. The most notable surge came between July 11th and 12th. And Curve DAO, Curve's crypto whale assets added 1.65% more tokens, taking total holdings to 6.18 million. So those three are being scooped up by whales right now. Vanguard calls Bitcoin immature, then becomes top shareholder of Bitcoin proxy strategy. Makes sense. Vanguard maintains its investment philosophy against pursuing speculative assets by refusing to offer Bitcoin and Ethereum, but it figures it's going to offer something in the way of supporting the companies that do offer these assets. So this way it doesn't look like a hypocrite, but at the same time it receives exposure to these assets that it's not planning on offering. I'm sure this makes perfect sense. It's a hedge against being labeled a hypocrite. Vanguard is now the largest shareholder of Strategy, holding over 20 million shares despite its anti-crypto stance. Strategy stock has outperformed Bitcoin, surging 850% in 2 years due to part to its massive Bitcoin holdings. MicroStrategy right now made another purchase, and the Bitcoin holding stand at 601,000 Bitcoin right now as of today. Michael Saylor, and how that became Michael Saylor dumped MicroStrategy, Strategy KSTRD. So literally he's got like 4 different stocks from one company for latest Bitcoin buy, and this is how he funnels his insanity of buying more and more Bitcoin, promoting the anti-self-custody bill and telling people to buy his shares rather than taking their money and putting it into Bitcoin. The insanity of it all cannot be made up. It's real, people. For the first time ever, MicroStrategy admitted that over the course of a single week, it diluted all 4 classes of the company's public securities. The liquidations are classed as accretive dilution because the sales allow the company to buy slightly more Bitcoin than the proceeds of its sales. This is only possible, of course, because investors did bid up its shares to a premium to its Bitcoin holdings, and founder Michael Saylor obviously hopes to continue attracting bids that maintain it. The company made $472 million in net proceeds by dumping shares of MicroStrategy, MSTR, STRK, STRF, and STRD at the market. By immediately diluting prior shareholders in each category, the company then bought the same amount of Bitcoin. This confusing exercise diluting shareholders to buy Bitcoin for shareholders has become commonplace at MicroStrategy. By focusing on the 21 million supply cap of Bitcoin and its potential for parabolic price appreciation, the company slowly adds risky leverage to its balance sheet to gobble up more of the limited supply of Bitcoin. And it's in his best interest that Bitcoin remains at the prices that it is. But do you think that the likes of BlackRock hold any fealty to any other company than itself? Like, I see BlackRock not having any hang-ups in dumping Bitcoin and bringing the price of Bitcoin to a level that will essentially crush the likes of MicroStrategy, because BlackRock has a lot more funds, they've got a lot more assets under control than MicroStrategy, and eliminating some competition from the market could probably do BlackRock some good. So the bear market could potentially be a massive sell-off of everything, and just I don't know, it's going to be epic. The bear market is going to be of epic proportions once all those companies picking up Bitcoin now, buying, creating Bitcoin reserves left and right, once they get liquidated, once their assets dump below the purchase value of Bitcoin, of their Bitcoin acquisition, man, that's going to be a bloodbath. And to close it all off for today, Pengu price prediction: billionaire Justin Sun backs Pudgy Penguins. Are NFTs making a comeback? No, I don't think so. But this grabbed my attention because there is a game on Telegram that I've been using for some time called Bonkers, and it's kind of a shitcoin type thing, but they introduced the Pudgy Penguins. So right now, I think I'm going to include the link. I think the link is below the video. Not Pudgy Penguins, Bonkers has implemented Pudgy Penguins into their platform. So I don't know. I guess this is a promotion. This is good for Pudgy Penguins. This is good for Bonkers. It must be some collaboration going on. But in any case, just wanted to bring it up. Check out Bonkers if you're interested in doing. One thing I want to just tell you: do not put any ton into any, and I mean any of these apps, unless you're trading. If you're doing a trade bot and you're trading on exchanges, that's a different story. But there's a lot of apps that, like, they're mining apps, and they say put in, spend 1 ton or 1,000 ton to buy our stuff, and then you're gonna get rewarded and you can keep mining. These are all scams. And the number of companies or these platforms or these games that I've seen disappear over the past year is enough for me to issue this warning. Also, one more thing which I forgot to mention today: the Crypto Millennials book is now ready for pickup. You can pre-order it. It's going to be live on September 1st. I'm almost at the end of it, so it might come out a little bit earlier than that. But if you are new to crypto, then this is the book for you. It gives you all the details, all the insights, all the information on cryptocurrencies. It explains why they're important, why they're here, how to build your lifestyle around cryptocurrencies, how to include cryptocurrencies in your financial future, and whether you actually want to decide to make crypto part of your financial future. All of that is in the book. Make sure to pick one up. It's the price of a Starbucks, whatever, caramel macchiato, so it's not going to kill you. You'll do your part in supporting my efforts to share more crypto with the world and be an early adopter, and I will love you for that forever. Smash the likes on this video, pick up a Descent wallet, ref link below the video, $30 off on one, $99 on 2 of these pups, Story of Crypto, Story of Crypto, and a biometric Descent wallet from Descent, yeah, I think that's what I said. I said it correctly. Anyway, have a fantastic day. Today is, what's the day? Tuesday. I will see you on a Wednesday. Peace.